Fortress Income Fund is a listed REIT. We've been listed on the Johannesburg Stock Exchange for nearly 5 years now, with a market capitalization of around 11 billion rand. Fortress consists of two separately listed units, an A unit and a B unit. The A unit trades very similar to a gilt or a debt instrument, whereas the B unit is a far higher risk profile unit, but obviously with a higher risk comes the higher return. The company, as I say, has been listed for a while now, and I think if you look at from where we came at a listing of around 1.8 to today's 11 billion, business has been good. We've grown the business hard. I think there's been lots of good asset management that's been done over the last 5 years, and today we sit with a portfolio that's mostly swayed towards the retail side, and that's on the direct property. We've got nearly 50 outlying shopping centres, and these are shopping centres that cater to mostly high footfall, commuter-orientated shoppers. And these are, in our opinion, prized assets, and generally they all trade very, very well. And we continually spend time, effort, money taking these centres from being good centres and making them better centres. That's on the direct property side. On the indirect property or the listed equities, we have a portfolio that valued at the end of the financial year of around 6.3 billion rand, mostly swayed towards our holdings in Nepi and Rockcastle. Those are two companies that have offshore based income flows. Nepi side, it's on the euro. On Rockcastle, it's the dollar. And these have been very good investments for us during the course of the year. They have performed well, they've performed to budget, but generally where we've done well is the devaluation of the rand. So all in all, if you look at the performance of Fortress, we've had a 14.36% increase in distribution, and if you look at the individual performance of the A and the B, the A unit has grown at 5% as projected, as we have previously put out. The B unit has had a good year. The growth in the B unit for the year has been just over 50-odd%. So once again, I think the shareholders of both units have been pleased with the results that we've put out. Going forward, we see more investment in direct property. It's clearly not an easy market at the moment. There's a lot of cash floating around, a lot of cash looking for investments. So we compete in that same market as well. And you have an opportunity of picking up properties every now and then. We're pleased that we believe we've about to announce a reasonably significant acquisition. It'll probably be sensed in the next week or two. And as far as the indirect property is concerned, we do operate as a opportunistic fund. So where there are opportunities in the listed entities where we believe there might be upside, might be a positive carry on the equities, we once again will look at acquisitions on that side. We do see ourselves as a growth fund. We are trying to get the fund to the magical 20 billion number. That's where I think the market looks to have the size that most of the big boys are operating at the moment. But we believe we'll be there within the next year or so by making mature investments, good investments, and investments that we'd be happy to keep for the long run.